We're seeing China's economy come back. It's incremental. It's slow. Similar to your previous guest, Mr. Kaplan, the former Fed governor, China's been unwilling to do major fiscal stimulus because they don't want to go in further into debt. They don't want to create inflation. So they're allowing the economy to come back. And what we're seeing from the Q4 earnings thus far is restaurants and travel are where you're seeing the Chinese consumer start to spend more. And we think that will broaden out to other areas like e-commerce, which was quite strong in terms of retail sales. So China's coming back just a little bit slower than maybe investors would like.
And so for investors that are trying to position their portfolio and looking across international opportunities, how strong is China as a portfolio play? And are there specific sectors within the region that they should be focusing in on?
Yeah, I mean, we're all invested in China, either explicitly or implicitly, that you have a lot of China exposure through great US multinationals, if it's Apple, Tesla, Starbucks, Boeing,
Nike.
a whole host. In terms of explicit, where we're really focused at KraneShares is on the growth segments of China's economy, that some of the underperformance of China indices is due to very high weights to financials, energy, industrials, materials, and real estate, low sectors. So at KraneShares, we want to get exposure to growth areas like domestic consumption as it happens online, clean technology, which includes electric vehicles, solar, wind, but also technology plays like semiconductors.
How much, though, is some of this optimism being offset by the weakness that we continue to see within the property sector and the fact that that continues to shake the confidence, not only obviously of Chinese investors, but also just from investor interest on a global scale?
Yeah, 100%. I mean, the real estate situation in China is dual faceted. One is the falling of real estate prices has weighed on domestic consumption as urban households have 2/3 of their wealth invested in real estate. So as part of their portfolios decline in value, they've been slower in terms of consumption. The other side of the equation is distressed real estate players like the Evergrande and Country Gardens, the lack of property projects, which means less construction workers, less demand for cement and steel. And that's why real estate is receiving so much attention from the Chinese government. They won't allow a financial crisis to occur. It's not in their best interest to allow real estate unfold into a crisis, which again is why we're seeing so much policy support.
As it relates to foreign policy and international business, how much of a trading event does the general election in 2024 here in the U.S. create?
I think there's, geopolitics. Unfortunately, the politicians from both sides don't get along nearly as well as business people. Just last night, you saw NVIDIA's CEO speaking to how they're actually creating chips for China's electric vehicle automakers. No different than Apple, Tesla, General Motors, ExxonMobil. Business people get along just fine, and it's unfortunate that the two sides aren't traveling more like business people are. I'm a little bit less concerned about the election because I think all the investors who are worried about it are no longer invested, and that's kind of makes me constructively bullish on the rally we've had since January.
You mentioned the U.S. multinationals earlier. What would be your top picks or plays for the rest of 2024 in China?
Well, I think self-serving and highly biased. Our flagship fund is focused. KWEB is focused on Chinese internet companies, but I think those companies, as we saw even today, look at Tencent Music Entertainment, reported very strong earnings. We had a smaller company called Tongchen Travel reported revenue growth over 100%. Tomorrow we have Pinduoduo, Tencent, and Kuwashu reporting. So I think the Q4 earnings is showing this rebound. It's been out of sight, out of mind for investors, and that's why we're seeing this grind higher, which I'm all for. Even today's B of A fund manager, the most crowded trades, long US tech, short China. I mean, we've already started the rally, and yet these people are still shorting. So again, that grind higher makes me very constructive on the space. And it's self-serving again and highly biased that I'm more. I'm heavily invested in KWEB personally, but that is an area I really do like just because of the very, very cheap valuations, as well as the orientation to China's domestic consumption story as it comes back.
Yeah, it was interesting, as you were mentioning, Tencent Music Entertainment Group and the fourth quarter paying users, the music paying users up 20.6% there, and the ARPU increased by about 20% year over year. So no doubt some good stats to come out of that report. Thank you so much for joining us here today. Brendan Ahern, who is the KraneShares Chief Investment Officer. Appreciate it.